Welcome back to TechKidFX for another Harmony One price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Harmony One chart, which at the time of this recording has continued to hold below the key area of support at around the $0.02166 mark. We have also lost the 20-day MA here on the daily chart and also continue to obey the Elliot structures. And before I get further into the technical analysis and also give you my next price targets here on the Harmony One chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to first give you the long-term scenarios that I'm expecting to play out here on the daily chart, where you can see that from these low prices that we had been trading within, we saw that massive bounce to the upper side, seeing the all-time high at around the $0.39 mark in what I'm terming as that first wave to the upper side. And after seeing the all-time high, we started the bear market, where we had been seeing lower prices in this ABC corrective structure in a move that gave us a low at around the $0.009 mark. And after seeing the low for that second wave, whatever we expect on the long-term scenarios is the start of an explosive move to the upper side in the formation of that wave 3, where I have minimum target areas at the fib level 1.618, and that is at around the $0.61746 mark, and that is the minimum that I'm expecting that higher Elliot wave count 3 to the upper side to do. And jumping to the 4-hour chart for further analysis and also give you my breakdown targets here on the Harmony One chart, you can see that here on the 4-hour chart, after making our lower low down there, we started this massive bounce to the upper side, obeying the Elliot structures, where you can see that I have this Elliot structure in red, having the first wave giving us a peak at around the $0.29 mark. And after seeing the high for that wave 1, we started a corrective structure to the lower side in the formation of these higher Elliot wave count 2, and using the Fibonacci's, connecting them from the low of the first wave down there to the high of that wave 1, I was able to come up with a minimum retracement area to the lower side in the formation of that higher Elliot wave count 2 between the fib level 0.5 and the fib level 0.78, which is a target area that lies between the $0.01968 mark and the $0.01385 mark. And it is within this yellow target area down here that I'm expecting to see the low for this second wave to the lower side. And you can see that at the time of this recording, we have managed to get into the minimum retracement area, within which I'm expecting to see a reversal to the upper side in the formation of that higher Elliot wave count 3. And yesterday we lost the fib level 0.618, which perfectly sits at around the $0.01727 mark. And now that means that we need to continue watching the fib level 0.78, which lies at around the $0.01385 mark, very cautiously over here, because in case we lose that key area on the Fibonacci's, then that would be suggesting that there are chances of invalidating this Elliot wave structure that we have right here. And whatever we will be seeing in case the breakdown continues is not the formation of this higher Elliot wave count 2 anymore. So we need to be watching the fib level 0.78, and that is at around the $0.01385 mark. And in case we continue holding within this yellow target area, then there are chances that soon we are going to see a reversal to the upper side in the formation of that higher Elliot wave count 3, since we have done the minimum that I was expecting this second wave to the lower side to do. And once that happens and we get confirmations that we have bottomed out in the formation of that wave 2, we can be able to sketch out target areas to the upper side in the formation of that wave 3. So that is what I'm expecting here on the short-term scenarios and also on the long-term scenarios. And if we also take a look at the indicators to see what movements will be supported here on the RSI, on the RSI, we are trading at around the 26 mark, meaning we have massive room for us to fully support higher prices in case the reversal happens. But in case the breakdown also continues, that movement here on the RSI will still be supported. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting that there are chances of continuing to see the breakdown to the lower side. So let's be patient and see how that plays out, and I'll be keeping you updated.